Hello everyone, welcome to our second episode of our podcast journey. Now, I have Shudhanshu Kumar with myself. Recently, he had given NISM 8 derivatives exam. Now, he will be guiding us and share his experience that how he scored 90 marks out of 100 in an exam with negative marking. So, Shudhanshu, before uh, continuing with the podcast, introduce yourself
Yes.
to our audience.
Yes. So, hi guys. I'm Sudhanshu Kumar, and currently I'm pursuing my PGDM. Especially, I'm doing my PGDM in finance. So, doing certifications in the exam, it is a normal part of life. So, I have already completed my NSM 5, and recently I have given my NSM 8 exam. So, we'll talk on this. Okay.
So, so this is the introduction about Sudhanshu. As you know, he is a PGDM student. So, Sudhanshu, before going into the exam, let's give the brief overview of derivatives. What is actually a derivative is, and why does it exist?
Okay. So understanding derivative, it is a topic which generally people think it is much difficult to understand.
Okay.
But we can like understand it with like some practical example. It would be very easy for us. Think of a person who wants to buy a flat in future. Like after 5 months, 6 months, you want to buy a flat.
Okay.
But you are worried about that price of that flat may increase in future.
Okay.
So you are agreeing with the contractor by giving some money in advance
Okay.
and like fixing the price currently for future debt.
Okay.
So this is the way derivative introduced actually.
Okay. This is a kind of a type of derivative.
Yes. So like this is the way we can understand the derivative. This is the normal like contract normal agreement we generally do in life.
Okay.
But we don't understand that we are like trading in derivative.
Okay.
But it is.
That means derivatives was introduced to reduce the risk.
Yeah. Like flat price is increasing, decreasing. Like it is fluctuating in the
Yes.
market. So you are trying to like book and you are trying to get a secured price for the future.
Okay.
So you are giving some amount in like advance.
Okay.
So this is the major mainly concept people who want to buy it, who want to sell it. So they want to fix a price.
Okay.
And the derivative basically it is a contract.
Okay.
So the derivative doesn't have its own value.
Okay.
The value of that derivative is coming from the underlying.
Okay.
So basically in our example of that flat,
Okay.
our agreement between the like contractor and the person who wants to buy, that agreement would be like derivative, but the underlying asset would be a flat.
Okay.
So that kind of thing we can understand
Means
by easy
agreement
language.
itself doesn't have any value.
Yes.
The flat has.
Yes.
Okay. So now continuing with just please explain its types as it has various types.
Yeah. So like if you like understood the topic itself in a easy language, then you can easily understand the we use generally into the stock market. People use option, future, and other things.
Okay.
So talking about the like types of it, we can differentiate majorly into 4 types of it. First, it is a forward, then future, option, and swap. So let us understand the forward. Forward contract basically, it is a contract which is generally it is a customized form of contract we generally do between the two parties, and there is no stock exchange available between the parties. Like me and you,
Okay.
we are doing directly a contract to buy something to sell something in future.
That means it happens only in OTC market.
Yeah, generally we call it as a OTC market, that is over the counter.
Over the counter.
Yes. So in that way, what happens? The person, like for example, you and me, okay, and we have decided that I will buying some goods from you. We have decided the price for the future date. That date is known as expiry date. Okay.
Okay.
Where we have to exercise our contract.
Okay.
So in forward contract, what happens? Generally, we can exercise our contract before the date. We can customize it.
Okay.
We change the price. So according to our mutual understanding, we can do anything.
We can
There
do
is no intermediary between.
Okay, that is the major difference between
Yes.
futures and forwards.
Yeah, definitely.
Okay.
We'll understand the forward future as well.
Okay.
So the problem is in forward contract, there is no intermediary. Okay.
Okay.
And if I need something, I have to find other counterparties for that. So that is the problem in forward contract. If the other party will default,
Okay.
if we have a forward contract, but at the time of expiry, I say you that I will not buy this and I will not sell this.
Okay.
So you cannot do anything because there is no regulator, there is no intermediary, there is no exchange here. So this was the problem. So with the this concept, we'll move towards the future contract. Okay. So this is the second type of the derivative, and future is having almost the same concept on same understanding of the forward contract, but it is having some standardization. Okay.
With some regulations.
Yes, definitely. So in future contract, basically there is an exchange in between. There is parties involved in the contract, same as a forward contract, but it is a standardized contract. You cannot customize your contract according to your need or your understanding. You cannot set the price. Price is already decided. The quantity is already decided. Like in one lot, how much quantity you need to buy or sell this.
Okay.
So that is thing. Expiry date is already decided. So you cannot exercise before expiry.
Okay.
But in forward, you
can.
had the right. Okay. Yes.
So it means future and forwards. Forwards have the flexibility, but future doesn't.
Yes.
But forwards come with
Risk as well.
major risk and
Yes.
low liquidity.
Yes, and yeah, sometimes in between, if I need money or if I need to buy something or sell something in between before the expiry,
Okay.
we cannot do. But in future contract, we cannot exercise before expiry, but we can take exit from that contract.
Okay, we can means hedge that position.
Yes, and we can sell to some other parties.
Okay.
We cannot exercise it, but we can sell it.
We
So
can
there
pass
is
through.
yes.
Okay.
So there is a liquidity. We can sell my contract to you.
Okay.
You will exercise at expiry.
Okay.
Okay. So that is the major difference between forward and future.
Futures.
The third type
Options.
of the derivative that is option. So option basically it is the same as a forward contract, but it gives you the flexibility that it depends on the buyer or seller who wants to buy or sell on the expiry date or not. So that depends on the buyer or seller.
Means it does not have any obligations.
Yes. So basically, according to definition, if you think option gives you right but not the obligation. So if you are a holder of an option contract, so you have the right to exercise. But if you think that you are bearing the loss, and if you will exercise, you will have the loss. So you can stay away from that contract, and you can decide that you are not going to exercise this.
Okay.
So that is the flexibility an option contract gives you.
Yes.
Okay. And the fourth type, the major type we generally cover, that is the swap. So it is a kind of also the OTC contract. It happens generally between the two parties only. But here is not the we are promising something like the derivative. Not future and forward type of contract. It is also part of derivative, but here we generally promise to exchange the cash flow between two parties. Okay. So take an example that you are having a loan of 100 crore, and I also pay someone 100 crore. I have the also loan of 100 crore. Okay. And we have the two parties. I am paying on fixed rate of 8%.
Okay.
And you are paying interest on your loan, that is 5% and plus my war early war. Okay. So that is the interest that is decided by the exchange or market. So if the market rate will change, so your interest amount will change. But my for 100 crore it is fixed of at 80%. So with regards to the change in the market, I don't have any risk on that. Okay. But I am thinking that if the market interest rate will go down, then the people who is having the flexible interest rate, they will pay less because they are having the flexible. But I have the fixed, I have to pay 8%. Either market is trading at 10% interest rate or 6%. So I want some flexibility and I want to reduce my because I have the understanding that the market rate will go down.
Okay.
So and your understanding is that you have the risk.
Okay.
You think that interest rate will may.
That means mutual understanding should be there.
Yes, definitely.
Okay.
My need would be different. Your need will like opposite understanding, opposite view. If two parties having,
And that
then
need
only
to
we
be
can
aligned with the trade.
yes. So the swap contract basically it comes with so much requirement because my underlying amount loan amount would be 100 crore, yours would be also 100 crore.
Okay.
And your requirement should be just opposite of my understanding and my view, then only we can go into that contract.
Okay.
So we decide to exchange our interest rate. So I will give you the fixed rate, and I will take you take from you the flexible rate of interest.
Okay.
And at the time of payment, I will give you 8% of whatever amount is there, and you will pay me the flexible rate.
Okay.
So that is kind of the swap contract we generally do. And this is the we have already discussed that the forward, future, option, and swap. So these are the four major part of type of derivative. Okay.
So just continuing with the swap, as we all know that there is one more type of swap, that is equity swap. So
Yes.
please can you guide us through that also?
Yes, we generally understand the swap in normal language.
Yes.
But there is a different types of swap as well. Okay. So there is a currency swap.
Swap.
There is a interest rate swap, there is a equity swap, and there is a credit default swap.
CDS.
So there is a four different types of swap as well. So there is a derivative has four types. In that, swap is one type, and under swap there is a four different type of swap. Okay. So the interest rate swap we generally we can understand in an easy language that where two parties exchanging their interest rate, fixed rate with the floating rate.
Okay.
That generally we understand as an interest rate swap.
Okay.
Second is a equity swap. In equity swap, we generally swap the interest rate or some amount of cash flow with the equity returns or a portfolio returns. So take an example that I am holding 100 crores of Reliance share, and you are having 100 crores of some FD investment. On that you are getting 7% of interest, and I will get according to the Reliance return in some specific period. Okay. So we'll exchange this. So whatever the Reliance return would be, I will give you, and you will give me the fixed rate of interest, whatever you are getting from the FDs. Okay. So this will come under the equity swap. So here one party is having the interest, fixed or floating, and we are exchanging with the equity return. On the place of equity or a specific share, it can be with the portfolio as well. Okay. So this was the second, and third is a credit default swap. So credit default swap we generally banks generally do it. Yes. I'm a person and I have given some loans to the person, but I'm thinking that this person can be default. So I will go to some other parties who will give me the guarantee that if this person is going to default. Then this party will pay me. Okay. So for that I have to give some premium. Okay. If for that, this is basically a kind of insurance you are getting for your loan. But we generally say it as a swap contract, but it generally happen into the OTC market only. So this is the credit, and another type of swap, that is the currency swap. Okay. So in currency swap we generally do the exchange of two currencies between two parties generally. Exchanging dollar with the rupees and rupees with the dollar. So generally what happens, take for example one company in operating in India and another company is operating in US. And US company wants to invest in India, so they need to convert their dollar into rupees, and Indian company wants to invest in US. So Indian companies also needs to exchange the rupees into dollar. So there would be transaction charge, exchange charge, and there will be a different way of doing this. So instead of going through this type of transactions where we need to bear more cost, because if the transaction is in $1 billion, the cost would be around 5 crore, 10 crore or much more. So to reduce this, both the countries Indian companies and US companies, they both agree to a point where US company will agree to give dollar Indian companies in the United States,
Okay.
and Indian company will give rupees to US company in India.
Okay.
So that they don't need to go for the exchanging the things.
Okay.
They can settle the trades between the same countries.
Okay.
So that is the main motive of the currency like swap.
So continuing with
Yes.
as many students majorly use or many traders majorly use only two products, futures and options, as it is
Yes.
on is the only are available on exchange.
Exchange. Yes.
So what is the major? Just explain within 2 lines. What is the major difference between options and futures?
Okay. So the major difference we generally understand in the option and future, like according to the trading point of view, and you are doing for your profits and all.
Okay.
So in option contract, you generally gives the premium amount. Okay. So to get into an option contract, you have to pay the premium to exchange. Okay.
Okay.
So if you want to buy something generally, you have to pay premium, and your maximum loss is your premium paid only. So, and in future contract, to get into a future contract, we have to like give margin to an exchange.
Okay.
That generally for one lot to have a 10,000 of contract value, you need to give the margin amount of around 1.5 lakh, sometimes 2 lakhs, according to it fluctuates according to market. Okay, so the problem is for one future contract you have to give 2 lakhs of margin. For one option contract you only needs to give the premium amount, that is 5 to 10,000, 15,000
In case of buying.
Yes. So in that like understanding on the trading point of view,
Okay.
option requires less amount.
Okay.
If you buy the option.
Okay.
If you are thinking to sell the option, then you have to give the margin. Okay.
You have to give the
And in future contract, either you are buying or selling, you have to give the margin, because in the understanding of the future and option,
Okay.
we have already discussed that option gives you flexibility.
Okay.
If you are a holder of an option and if you think that option is giving you loss,
Okay.
you can decide that you are not going to exercise this.
Okay.
But this is not happening with the future contract.
Okay.
In future, you have to exercise the contract.
Okay.
Either you are having loss or profit.
Okay.
So in that case, if you are having the huge loss, then you may like take back step and you are not agreeing to exercise the contract on expiry.
Okay.
So to secure that counterparty risk, exchange ask the margin before you are entering into that contract.
Okay.
So for that reason, future requires more money to do trade. So according to the trader's point of view, option looks easy,
Okay.
but it is having the so many complexities in that, like they have the decays, different Greeks of the theta, different Greeks of the option that impacts the option price.
Premium
So
price.
yes,
Okay.
so these are the generally complexity comes with the option.
Okay.
And the future, it is like a linear instrument. Okay, so how the market will fluctuate, market price will change, it will directly reflect to your future price.
Okay.
But in option, you have to, there are so many factors that affects your premium. Sometimes the market is going upside, but your call premium is not going upside,
Upside.
because there are so many factors involved in that.
Affecting the option
Yes.
price.
So according to understanding, the option is a bit tricky
Okay.
to understand, but future is generally linear.
Okay. If you have to prefer one out of both of them, which will you go for?
See, there is no like one specific answer for that.
Okay.
It generally differs according to
No,
your
according to
objective.
you.
Yeah. So according to me, generally, I already said that it is not a like one choice.
Okay.
It depends on how much money I have and what is like the requirement and for which view I am trading at.
Okay.
Because if I am like having the good and strong view,
Okay.
and generally future I have to exercise it.
Okay.
So the problem with the future, I have to buy. So if I think that I'm going to buy the Reliance share in future,
Okay.
so I will get into the future contract because I have to exercise in the future.
Okay.
But the option, I can go for the like making profit and like converting my market view in the like monetary terms.
Okay.
So I can go with the option price.
Okay.
So that is the like a basic understanding of
Means
it.
option is quite very short time, and
Yes.
futures is quite it is a short time, it is a short period.
Yeah.
We have expiry of 1 month, 2 month and 3 month, and in options we have a weekly expiry. So in such case,
Yeah, generally, these derivatives were made to the underlying.
Yes.
So if you are holding underlying, if you think to buy
Okay.
really buy it, so then you are going to these contracts. But after the introduction of option, you don't need to buy your underlying.
Okay.
You just make a profit out of it. So it gives you a leverage.
Okay.
Then with a small money, you can't you get the high amount of leverage in that derivative.
Okay.
But in future contract, if you are getting into a future contract, you have to buy it. So if you are thinking that you have to buy and you are going to buy some assets or underlying in the future, so you should go into the future contract. And if you are going in option, you have to settle your like option derivative into cash. You take profit from that and you add that into the current market price and you buy the underlying.
Okay.
If you don't want to buy, you just make your profit and do whatever.
And no, I am expecting the answer in such a way that in case of that market is falling, then we
Yes.
can sell the futures or buy the futures. Accordingly, that we have many multiple strategies like protective put. So in such
Yes.
cases,
Yes, so for that, first we have to understand the two different ways. Like there is a call and there is put. So whenever your market view is upside,
Okay.
you can buy the call. Okay, in option contract. Okay.
Okay.
So whenever the market will go up, your call price will also go up.
Yes.
So if your market view is upside,
Okay.
you can buy the call.
Okay.
But option gives you, the way this contract has designed. Whenever the market is going down, then also you can make a profit.
Profit.
So you have the option to buy the put option.
Okay.
Okay. So in put option, whenever the market will go down, the price of that put option will increase. So you make profit while market is going down.
Going down.
Yes. So in this way, you can like transform your market view in the monetary terms, and you make profit.
Profit.
So there is a different way and there is a different strategies. You can take trades, you can hedge it as well.
Okay.
And in the option, you have the different way of doing strategies. You have the market views when the market is sideways and it is more fluctuating. So there is a different customized strategies for that.
Now let's continue with it. Let's understand that why derivatives used, as we have multiple things: arbitrage, speculation, and
Yes.
hedging. So please go through all of this and with real life examples, so
Yes, definitely.
it will be easy to understand for our viewers.
Okay. So starting with first we'll start with the hedging. Okay.
Okay.
That was the main motive of the introducing of the derivative contracts.
Okay.
So first in an easy language, taking an example of that same example I have introduced in the starting. You want to buy a flat. So you are sure that you are going to acquire the asset in future,
Okay.
but you are worried about the fluctuation of the prices. Okay. So it may go up. So you are thinking that you will lock the price in current position
Okay.
for the future date.
Okay.
For that you are paying premium. So you are hedging the risk of the changing price of that underlying asset that is flat.
Okay.
So if the price will change, then also you have the agreement that you will buy at a fixed price.
Okay.
So you have the hedge your that contract and that the buying of your asset with these contracts. So if the price will go up, then also you will get at the fixed price. So that is the main motive, and we generally do with the stocks and in option and future we generally do this.
Okay.
Because we decide the price according to your strike price. You will get the underlying. So whatever the strike price, you are holding the option.
Okay.
So that is the good point, and that is the major reason of the derivative introduction. Okay.
Okay.
The second way you can use these derivatives in speculation. So speculation generally you do in the option contract. Okay. So when you are entering into a contract like option contract,
Okay.
so you are not liable to, you are not obliged to pay exercise that contract.
Okay.
So you can just make profit out of getting this contract, and you are not going to buy the underlying.
Okay.
So that is the way of speculation, that you are taking the risk and understanding the view of market, and you are making profit out of it. So while you understand that market is going up, you buy the call option,
Okay.
and sometimes you think that market will go down, you buy the put option.
Okay.
So that is the way you take the risk, without assuming that you are going to buy the underlying. That is the way of making profit is speculation.
Okay, here we can say that speculators' money goes into hedgers' pocket.
Yes, sometimes. Speculators are generally take more risk in the market.
Yes.
Because leverage comes with the risk.
Yes.
So if you are taking more leverage, there is a high probability of losing money as well. Okay. And with the short momentum in the market, you may lose the huge money. So that is the way the speculator and arbitrager, speculator and the hedgers do.
Okay.
The third use of derivative, that is the arbitrage.
Okay.
So first I would like to introduce with the term and the concept of arbitrage. It is the way we generally use to make the profit out of price differences of one single assets or instrument between the two market or two exchanges, two platforms.
Okay.
So we can do it. Okay. And within different two time duration we can do it as well.
Okay.
So let's take an example of something you have the home.
Okay.
And in front of your home you have just opened one shop. Okay.
Okay.
You are selling mango on your home. Okay.
Okay.
And in that shop you are selling mango.
Okay.
So in market you know that the market price is at 200 rupees. Okay.
Okay.
So everyone is selling that mango in front of your house is at 200 rupees. Okay.
Okay.
But you know that in the backyard of your home there is one seller of the mango who is selling that mango is 180 rupees.
Okay.
So you first take the order from the front someone.
Okay.
And you go to the backyard of your home. Okay. You buy at 180 and you sell at 200. And you just make the profit of 20 rupees just by buying from one market and selling at another market.
Okay.
And make the profit out of price differences between two markets.
Okay.
And this generally happens between because of the information asymmetry.
Okay.
Because the buyer who is buying from you at 200, he doesn't know that the same mango is available somewhere at 180 rupees. So for that reason you are making the profit. But market generally gives you very less chances of making profit out of arbitrage. And it is risky. Because in fractions of second the price can change. This was the example of mango. It is the OTC contract we can say. But if you come in exchange, the prices of the stocks between the it is the difference of it is a 5 paisa, 20 paisa, 50 paisa.
Stock exchanges.
Yes. So it can came to the same price in seconds.
Okay. Yes.
So you have to be a very fast and you have to a very strong system for that to do this.
As the price difference is very minimal, so arbitrage is only for the big traders or HNIs, as they can buy in huge quantity and sell the same in another market. If the price difference is think about 50 paisa, but they have the huge quantity for one lakh quantity, then they can make profit out of it.
Yeah, sure. Because if as a retail investor, a retail trader or a small trader you are going to do this, you will not have a significant profit and you are taking more risk because your system can go down, your internet can be slow or something, some technical glitch can make with a huge loss.
And you have to pay the brokerage as well for both transactions for buying and selling.
Yes,
as well.
but think one institution is doing this. 1 crore of share buying and selling with the price difference of 50 paisa. So he can make 50 lakhs out of it.
Yes.
So they are having the huge money so that they can make a profit. But if you are doing with the 1,000 rupees, 5,000 or 1 lakh rupees, there would be only some price profit, or it is very risky for you as well.
Even they can make losses also.
Yes. So this is very risky because you are buying from one market at 5 rupees 50 paisa and you think that you will sell at 5 rupees 60 paisa, but in second market the price has gone down to 5 rupees 20 paisa. Then you have to make the losses and
otherwise you
the
losses.
Yes.
Position as well, and it will block the money.
Yes. So for this you need a fast systems and super computer maybe.
Okay. So guys, this was the brief of derivatives, its types and the functions, and why does derivative this. Now let's come toward the examination point of view. So Sudhanshu, just tell about that in which manner the exams goes, whether it is online or offline, how many times does it get, is its marking scheme, and overall.
So starting with this exam, first you have to like do your registration with the NISM portal on
Okay.
NISM 8 certification.
Okay.
This the main reason for the difficulty this exam, the concept itself. It is not so much easy,
Okay.
but if you are if you are having the good conceptual clarity on the topic,
Okay.
and with the practical knowledge, if you are able to apply the things in the real market, if you understand the changes in the current market,
Okay.
you think that what are the changes you can implement in the
Does it
things.
necessary that if you have to appear for derivative and NISM 8 exam, you have to be a practical knowledge of derivatives? You should be in trading since you have at least experience of 5 to 6 months. Thus, it is
No,
necessary.
like this is not a specific requirement of an for exam that you have to do, and you should have the like past experience of derivative trading as well.
Okay.
So this is not a requirement, but just you have to make a clarity on the topic,
Okay.
how the practical market works, and
Okay.
in which market what are the like theme, what are the view you can create, what are the
Okay.
concept you can understand in that. So that is the major point.
Okay.
This examination generally happens in 100 mark exam, but it is having the negative marks,
Okay.
and to pass the exam you have to score 60 marks minimum.
That is 60 percentage and
Yes.
with minus marking,
With
so it is
negative
kind of
marking.
difficult
Yes.
to pass the exam.
So it is a bit difficult, but
Yes.
if your concept is clear, then it would be a moderate to easy to moderate level for you if you are having the good conceptual clarity,
Okay.
understanding of the market and instruments.
So this is about the passing the exams.
Yes.
Then if you have to score the marks like you, as you got 90 marks, so what is your way of learning? When did you start preparing, and what is your approach towards this exam?
Like so for my situation, I'm doing my I have the conceptual clarity and to understanding of the derivative. I had the curiosity around 2023.
Okay.
So it is back then 3 years,
Okay.
and I have the practical exposure in derivative market. So I had good conceptual clarity on these topics.
Okay.
And after in PGDM we have understood so many deep concepts into that,
Okay.
and the types, uses, and the strategies you use generally. There are so many deep concepts,
Okay.
and there are so many small concepts
Okay.
that generally impacts your real trade.
Okay.
We generally avoid it, but now after understanding these things, we are now focusing on that as well in practical market as
Okay.
well.
Rather than your past experience and past knowledge
Yes.
and practical and critical thinking,
Yes.
what other resources did you use for the exams? Does there is a YouTube playbook or
Yes,
such
sir.
kind of you appeared for some of the mocks?
Yes, sir. Because NISM gives you the study material.
Okay.
You can download from the NISM website
Okay.
as well.
Can you just give the brief? How many topics does it cover? Which topics has the higher weightage as well? And take the example of your own exams, that which kind of questions were mostly repetitive and from the same topic as well.
Yeah. So generally, according to my experience,
Okay.
so I started preparing with the NISM, the study material available on the website.
Okay.
Then I used the playlist on the available on the YouTube. That is chapter by chapter, and after understanding these conceptual things, you have to do some. You have to be prepared for the mocks as well.
Okay.
You have to give some mock test so that you can get your understanding, how much knowledge and how much understanding you have
Okay.
so far. So
Does it really help that after giving the mocks you can score good marks?
yeah, somehow, but there is no
As-
similarity of the
As I
questions.
see, many student does not have that kind of means what we can say
Understanding on
understanding, and they take it more leniently.
yes.
Yes, as it is a mock, they don't give it genuinely. They just take they doesn't read any question. They see the 4 options and just read at a time. If they don't know, they just stick.
No,
As
in
it
that-
comes with the minus marking.
Yes. In that way, you cannot score. You may pass the exam,
Okay.
but you cannot score a good marks.
Okay.
Because in starting of your preparation first you have to go through the like study material given by the NISM, because it has everything in detail in that. Okay. So every concept they have like given with the examples and all the things. Okay. And then you have to go through some of the YouTube playlist, and there are so many materials available on online. Okay. Then you can go for the mock. Okay. This is the third layer of your preparation. Okay. Because in mock exam, and you have to mock exam you have to give as a very serious way, because you have the minus marking. So if you take it very leniently, you can score good marks here at your home, but in that exam you will not get the same question. If you expect that your question and the mock question will same in the
as
exam,
the environment differs, the pressure differs there.
Yes, because there is a negative marking, so you will be you will have the fear from starting that if I'll wrong one question, that I will like
lose the marks, lose the 1/4 marks.
Yes. So that is the reason. And like if you are giving your mock, make your mind yourself that you are giving the right exam, and you are giving the proper exam, serious exam in the exam hall, because that will give you the mindset and the way of preparation. You will get to know that how much prepared you are right now. Because without taking it seriously, I don't think you can score very good marks.
You can just pass the
yes
exam.
Yes, definitely. It is not that much difficult to pass the exam.
So continuing with your own exam, what was the difficulty level? And as it exams comes with both conceptual and numericals. So conceptual question is bit more have a bit more percentage as compared to numericals. So what is the difficulty levels that you have built for the exam, and how many number of numerical questions you attempted, and in overall percentage of, for example, there are 100 questions, how many number of numericals were there? As many students fear of mathematics, so usually they lose marks there.
Generally, I don't have like much remember about the exact number. But there were a significant number of numerical questions as well. So in that they may ask you the questions like they will give you the strike price, they will give you the market view, and you have to understand the which option strategy may work in that market situation. If your strike price is this much and market has moved towards opposite view, what will be your probable loss, and what should you do? Sometimes they give you that much practical question that if you are holding of this contract, market has
some calculations. Does we get calculator or pen or page?
No, you can just do by your mind. But they will provide you the calculator in the desktop as well.
There only we can.
Yes. So you can use that calculator to calculate. So because sometimes you need to calculate the margin as well. So for margin it is a huge number. So you have to use the calculator.
As it is not possible all the students to go calculate it in the mind itself. All students are not like you. So we have to think. So we get the calculator within the desktop.
So basically according to my experience in the exam, first you have to make the clarity on the small concepts that is given in the syllabus. So from the American option, European option, there is some concepts of impact cost. So there are different way, and they can ask and twist the question from one word to another. And you may like think that this question is very simple, but after reading the options, you will get confused. So you have the given whenever you give mock, you will get the simple question or the very less twisted question. But in exam, they can ask you the question in the way you have to challenge your mind. You have to understand the concept in very deeply, and it will take time. Sometimes you will not get confidence while answering the question, and you will have the fear of losing marks because it is the negative marking. So that are the things happens together in the exam.
As you used your previous knowledge, past learnings, and you have given the mocks as well, you have gone through YouTube series. So what was the some unexpected question that you never went through, and it comes? Does it happen with you?
One or two questions there was like I was aware of the concept, but not the way the question were asked. So one of the question I can remember that was related to the American and European options. So I have the understanding that in American and European option there is a conceptual difference is that like in American option you have the flexibility to exercise it before expiry.
Okay.
And in European option you can't exercise it before expiry. You
Yes.
have to wait for the expiry date, then only you can exercise.
Expire.
So generally, my understanding says, and it is there, that generally American option price is a bit higher
Okay.
because it comes with the flexibility.
Yes.
So when it gives you one extra option,
Okay.
flexibility to exercise before expiry,
Okay.
so the option price generally it is higher
High.
if we compare with the European option.
Okay.
But the question was asked like that: if everything is constant,
Okay.
if other factors are constant, then what will be the the American option and European option are the same.
Okay.
So the question was like, if everything is constant, then American option and European option is same.
Okay.
And the options was like that this facts is right, wrong, may, or this kind of things. Okay. So I was confused that which factor you are talking about. If you're talking about the expiry date and that option price things, then both are the same because both are the options.
Yes.
But there are the conceptual difference on the option price because one gives your flexibility, so the price of the American option is high.
Okay.
One difference was there, and second difference was the expiry date. Okay.
Okay.
So the question was like, if the like things are constant among the two these contracts, then they are the same.
Okay.
But which factor you are talking about, that was not very clear. So I was a bit confused in that way. So the concept I know,
Okay.
but what you are actually asking, what you expect from me,
Okay.
that was the tricky point in that.
Okay. Okay. So now let's move towards the career perspective. Does this certificates really helps students to put their in resumes, and these certifications put some weightage in their resume? Do you think so?
Yes, like somewhat. It doesn't give you a guarantee to get some job roles or do
Means
get
some
some job.
kind of edge.
Yes, but it gives you as over the normal student who is not having the knowledge but don't have any certification in the derivative.
Mean-
So you will get a bit advantage of that
Okay.
because you have the certification by NISM.
Okay.
And
Means it helps to
yes.
make you employable.
Yes, it gives you a bit confidence. It gives you more credibility towards that.
Okay.
Interviewer may understand that if a person is qualified, the person has qualified the NISM 8,
Okay.
then he must having the good knowledge of derivative.
Okay.
So he can use in practical market and he can understand the actual things whatever happen
Okay.
in the market. So without asking you one question, interviewer can understand that the person is having a good knowledge of derivative.
For
So
example,
that is the is.
For as many of our students want to make their career in investment banking, so derivatives is the major portion that is covered in the interview of any investment banking
Yes, like
job role.
yeah, investment banking is a vast topic.
Yes.
Okay, and a vast area.
Yes.
It covers different. Derivative is just part of it.
Yes, but it covers our area, so
yes.
it will help them that if they had a certification, they had
Yeah,
some
definitely.
knowledge.
But according to current market situation, you must have a CFA level exam.
Okay.
Then you can get into the investment banking. Otherwise, you can go for the equity research and so many things.
This is just to
Yes.
just quick start or
Yes.
just to test our knowledge.
Yes, this is if you want to get in these sectors,
Okay.
then this is just a starting point of yourself. You can say.
Okay. As we have many other series like NISM 5 for mutual funds, NISM 8
Yes.
derivatives, and you also now planning to give NISM 15,
Yes.
which is for equity research and analysis. We will also make the same video for that how to prepare, as he is preparing now, and he will appear.
We'll make the preparation
For the
update
exam.
and preparation
So-
video as well on that.
Yes. So this is about the careers perspective. Means it is useful. Student
Yes.
should do it.
Yes, definitely, because if you have the extra time after your under study and your college time, then you can do some these extra certifications that will help in career.
Okay.
And for that, I'm doing this currently because I'm also a student.
Okay. So now let's continue with the mistakes and learnings while preparing and while attempting. As you scored very good marks, but still you think that I made
Yes.
these mistakes and these are my some learnings. So
Yes.
what were they?
Like you may achieve something good level,
Okay.
but there is always a scope of improvement. Okay?
Yes.
So in my exam, I was I attempted 100 questions,
Okay.
and there was 92 question right and 8 was wrong.
Wrong.
So I got 90 because the 2 marks were gone because of the 8 question was wrong.
Okay.
So the 8 question that was wrong, that was not because of my understanding, because I ignored some of the topic
Okay.
that I underestimated that I know this topic, so I should not go through these again and again. But the concept that was very deep, and the question was asked in that way.
Okay.
So that was, I think, mistake, I would say, that I ignored some topic and underestimated that these are the small concept, this question or that.
This will never
Yes,
come in the
yes.
exam. Okay.
Yes, but it came actually.
Okay.
And generally NISM asks you that how much prepared you are.
It is kind of
Yes.
unpredictable. It can ask questions from
Yes.
anywhere. Okay.
Yes.
So, as many students have misconceptions about the exams, as we already cleared that you should not have to be a prior knowledge of trading, and
Yes.
but after giving NISM 8 and scoring good marks, they think that now I can trade. Does it make any sense?
No, understanding the concept and utilizing for your practical,
Okay.
it is the two separate things.
Yes.
The concept and the thing you are going to do in a practical life.
Okay.
The understanding of market. Market is very volatile and it can go in either way.
Okay.
So you have to understand, that in simple way how the derivative you generally use.
Okay.
But the market view, strategies, and for derivative, understanding strategies, market view, and concept is not enough to do and make profit in that. Okay. So first, you have to prepare by your mind as well.
Okay.
So mindset and psychology is very important in that,
Okay.
because sometimes you lose money, then you have the fear, or you have the way of taking revenge and recovering your loss, and you make continuous losses in that.
Okay.
So you have to make yourself prepare for that.
Okay.
That yes, you have to accept losses sometimes, and market, you cannot fight with the market. So you
Yes.
have to understand these concepts, and
you
that
must have some patience, and it is
definitely.
a learning process.
And this can come only with the experience.
Yes.
You cannot understand and you cannot get these kind of things with the
Just by reading theory
yes,
and
reading
applying.
and understanding. You cannot get this by experiencing.
Okay.
So you can use this concept in the trading, but you cannot you cannot do or be a good trader while understanding this.
Okay. It comes with the experience, and
Yes,
you have to
definitely.
build psychologically. So, continuing with it, which one concept you love the most in derivatives, and you came to know about it or only after studying it so deeply? Which concept you love most? It can be any.
Yeah, there are concepts like impact cost.
Okay.
Generally, I was not much aware about this before,
Okay.
preparing for the NISM 8 exam. So I was knowing that there is some differences, and you sometimes the market is very volatile. Then your stop losses can go much down on that, because the market was so much volatile.
Okay.
So you could not get the best price on that.
Okay.
But the impact cost play a vital role while making or considering a stock for the index as well. That was a very new and tricky, because whenever the one stock is considered for the index, that stock should have very less impact cost, that should have a very high liquidity. They will also they should also qualify for the market cap requirement, free float market cap as well.
Okay.
So that kind of all requirement comes with the impact cost as well.
Yes.
So if your stock is having the good market cap,
Okay.
it is having high volatility, but you are having the high impact cost as well, then your stock may not be considered as for the index.
Okay.
So that was a very interesting concept I gone through.
Okay. So now let's continue with some rapid fire. You have to just answer in one word or one sentence. Okay.
Yes, I'll try.
Okay. Futures or options?
Options.
Buyer or seller?
Seller.
Hedging or speculation?
Speculation.
Okay. And most difficult chapter in your learning process?
Like I don't think anything that much difficult away or
Okay.
most difficult.
Okay. Means difficult to understand.
Yes, I was like able to understand the concepts,
Okay.
easy to moderate.
Okay. Favorite derivative strategy.
Derivative strategy, favorite is I can say that it is a long straddle
Okay.
because it gives you opportunity to like capture the unlimited profit while the market is going either way.
Okay.
So that is the good for
One finance YouTube channel.
uh, like finance YouTube channel. I generally follow the valuation school
Okay.
for that basic concept, and they give so very clarity on
Okay.
that.
NSC or BSc.
NSC or BSc, uh,
If you have to choose
Yeah.
one.
yes, for what?
Uh, which
For
means,
trade or to buy a stock because NSC is coming with the IPO.
yes. So according to kind of buying perspective and with the stock exchange perspective, the weightage they covers, which do you like most? You do like to trade Sensex or Nifty? That's why if NSC is NSC or
Oh.
BSc.
So for generally, I used to trade in Nifty.
Okay.
So generally, it is the like NSE.
As per my knowledge,
Yeah.
you are a big fan of BSc stock, so
Yeah.
that's why I'm going
Yeah,
to this question.
my all-time favorite is the BSE stock because I'm tracking it from around 1800 to 2000. It went to 6900, 7000. Then it had the stock split as well. Then it again go to it went to around 4200 nearby. So it is a good stock and it is having a good potential right now as well. But it will have a threat by NSC.
And now BSc
Mm.
coming with their new index,
Yes.
that Sattvic 100. So
Yes.
just for our viewers, just
Yes, BSc and
state
NSC.
in short.
Combining BSc and NSC,
Okay.
Indian stock market is having the highest number of trade contracts in terms of derivative contract.
Yes.
And BSc initially BSc was not having that much amount of share in
Yes.
that, but now BSc has increased its market share around. It was around 24 to 26% in
Yes.
the total derivative contract that are
Yes.
being traded, and the NSC is having 74 or 75% something. So now the BSc is continuously increasing their
Yes,
market share in
recently
the
they
yes.
crossed the overall trading means kind of that weightage.
Yes.
Overall weightage, I think it is now 14 and 51 between NEC and BC.
Okay.
Recently, in last quarter, I saw.
Maybe I'm not so much
Yes.
updated on this topic, but like I'm talking long before around 5 to 6 months.
Okay.
This was the update that the BSc is having. BSc is
Yeah,
growing in the
growing,
market
yeah.
share in that.
They are good.
Yes.
So one advice for a finance student, those who are appearing for the finance NISM 8 exam.
For NISM net, like I would love to give advice to me as well. This
Okay.
that whatever the concept we learn, we understand.
Yeah.
Try to understand in a practical view,
Okay.
and how these concepts apply into the real world. That is that gives you more clarity on this,
Okay.
and think everything practically, and see every numbers with the doubts.
Okay.
Then you can get a more clarity on that number and by that concept as
Means
well.
we have to do forensic audit.
Yes,
of
definitely.
everything.
Yes,
Okay.
definitely. Because whenever you see one ratio, one concept with the doubt and asking questions multiple times from yourself,
Okay.
from that concept, and you have so many resources available, so you can use them to make a very very clear understanding on your point of view.
Okay. So guys, this was the discussion, and today we highlighted the importance of derivatives 8 exam, that and how you can prepare, what are derivatives, what are its types, and what are the multiple functions of derivatives. As you all get the guidance from Sudhanshu, that how should you prepare for it, how you can score good marks, which kind of questions comes, and you can take and follow with his advices and suggestions, then you can definitely score good marks in NSM 8. Meet you soon. Stay tuned.
Yes, I would love to say that this was not a kind of guidance, but this was an experience sharing, that whatever
Yes.
I experienced
Yes.
in my journey, so you can use it in your way. That was all.
Okay.
Thank you.
Thank you, Sudhanshu. Nice to meet you.